Sure. So for sure, the bright spot is you have to point to the rides business, right? Eats is nice. It's emerging. It's evolving. It has probably a fair amount of work, room for improvement. But the rides business is already doing, north of $2.5 billion of EBITDA on a run rate basis. It's very difficult to argue with the fundamentals of that part of the business. They have other, obviously, aspects, Eats and other loss-making parts of the business that they certainly have to address, as well as the whole, elephant in the living room around autonomous cars. But certainly the rides business is absolutely the crown jewel of the business at the moment and for the foreseeable future.
And for the time being, I thought it's interesting you point out Uber does 7.5% more bookings, more booking dollars per hour than Lyft does, and that's because of shorter rides. What are the different dynamics at play there, and is it sustainable?
It's a piece of research we've done on our own over the last few months, and it kind of surprised us in a couple of ways. What we were doing was looking at kind of like-for-like rides in 10 cities right around the U.S., and what we found was that even though Uber was a little bit cheaper, right, they were doing more throughput, as you say, so you could get places quicker. And so if you're a driver, right, and you're looking at both platforms, who are you going to pick? The one where you can make more money or the one that you can make less on? And so that's why we kind of argue at this point. We think Uber, because of its size, because of the power of its algorithm, we think they have a structural advantage versus the competition in driving better throughput.
What is its market share vis-a-vis Lyft or any other competitors nationally in the United States and globally?
Harder to say globally because, again, they're in 63 countries around the world, and it varies. On average, I would say they have somewhere neighboring around 70% share in the U.S.
Can they hold that?
Absolutely. I think our research suggests they may be able to increase that over time if they are able to leverage the structural advantage we're talking about.
Do you read anything into this ELLIOTT move into SoftBank, Brad? I mean, Uber's been one of their relative success stories.
It's hard. I obviously don't cover SoftBank, so it'd be pretty speculative of me to place an opinion there. I'd probably have to pass.
And finally, given the comments that Lyft CEO made recently about sort of taking price and not forcing discounts in the market, is that the most important dynamic for these two companies for the time being, and perhaps a relief to investors?
I'm not sure I quite follow the question, but I mean, I guess you're going to continue to see various forms of discounting, right? It's a growing market. It's a land grab for market share, and that's going to certainly be a part of it. Our view there was, Uber, with its multi-platform approach, multi-geography approach, just has a significantly greater ability to sort of cross-platform and drive loyalty on the Uber platform, whereas other companies, one of which you mentioned, sort of is a little bit more limited in their ability to drive loyalty and obviously dip into the subsidy bank to do so.
All right. Brad, thanks so much. Brad Erickson, $50 price target on Uber, which is at $37 today.
Thank you.